Hello, guys. Once again, welcome to my show, the Stock Analysis Show. I will always maintain my goal here, which is to make you rich by showing you good stocks that you can buy and hold and make money. Remember, like I always said, this is not a get-rich-quick strategy. Stock investing is not a get-rich-quick strategy. It's something that you build over time. The time is not that much long. Just like a farmer go to the farm, plant a seed, then he or she will wait for the seed to grow, and then they will harvest it. The same thing with stock investing. So here I'm going to show you those stocks that will grow over time and make you rich. Now, our stock of interest today is Netflix. Netflix, make sure you're seeing this. Netflix is our stock of the day. I'm sure you must have heard of this stock before. It's a very popular company. Netflix. So Netflix, as you all know, is an American subscription video on demand over the top streaming service. So it's a video company, and they make movies too. So it's a one of the most popular video streaming service company. So their main work is to distribute original and acquired films and television shows from various genres, and their shows are always available even at the international level and in multiple languages. You already know those information anyway. So generally speaking, Netflix offers TV series, for example, TV series, documentaries, feature films, games across various genres and languages. So it's really popular. And I know, I remember the time when they were using mailing system, whereby those are the days of DVDs. You register with them, and then when you require a video or a movie or a TV show, they will mail you the DVD to your mailbox. But they don't do that no more. It's more of streaming now. Anyway, my analysis of Netflix today will be based on information I will get from 4 different places. One is the company's income statements, not all the information, the one that are relevant for this analysis, balance sheet, cash flow statements, and the general stock information. Okay, and now to get this information, what we have to go to a place where we can get those information firsthand. What other place is better than where we can get that information free of charge, which is in Yahoo Finance? Let me see if I can get it. Yahoo Finance is where we can get those information free of charge. And Netflix, as you know, the trading symbol is NFLX. Once I put it in, you can see that the company pops out. I click on it to bring information about Netflix. Again, I'm going to make sure that you are seeing this there before we now jump into the company. Now let's look at the stock, the general information about the stock by looking at the chart. Okay. So I'm going to click on the chart so I can open up Netflix charts. And I'm going to insert 200-day moving average. Yeah, 200-day moving average on this stock. Okay. Now, you can see from here, make it, because this is a long-term investment, invest in some, I made it 5 years, let me make it 2 years, see. Yeah, unfortunately, from May 2023 to May 2022 to May of 2023, Netflix was trading below moving average. However, it reversed that point onward to today, it is trading above moving average. Now, when a stock is trading above the moving average, what does it tell us? As we know already, given that Netflix, as of currently, is trading above the moving average, and this is the 200-day moving average. So this generally indicates bullish sentiments among investors and a potential uptrend in the stock price. So for long-term investors, in Netflix, this is a positive outlook. You know, I mean, there's a reversal, and then you can see the moving average right here, and it's trading above that. Probably a lot of things. People are now getting more of their movies and TV show from streaming services, or they're not, you know, streaming services have become very popular. Now, remember, this will not tell us everything about Netflix. So let's look at the 5-year moving average. Okay, again, there's a reversal here. It was trading above that since 2019 until 2022, when it went down, traded below. Then now 2023, towards the end, middle of 2023, it went back up, and then it's now trading above, way above moving average. Again, that shows an upward trend, which is good for long-term investors as well. Now, like I said, this will not tell us everything about the company. There are other information that we need. So to get those information, I'm going to look at the statistics about the company. You know, when I say statistics, I mean things, information, financial information that we can get from their financial statements. So I'm going to go there, down there, look at the statistics for Netflix. You look at this. Under profitability, you can see that Netflix has a profit margin of 16.04%. So this profit margin of 16.04% indicate a healthy bottom line efficiency, as Netflix retained over 16 cents for every dollar of revenue or remains. And operating margin of 16.94 means that, well, actually it reflects a good operational efficiency, because it measures the proportion of revenue that are left after paying for variable cost of production. Now, next is the management effectiveness. Look at this. Return on equity, 8.93%. Return on assets, 8.93%. And return on equity is 26.15%. Well, what does this say? The return on equity asset of 8.93% shows how effective Netflix management is at using its assets to generate earnings. So what does it mean? It means that 8.93% is a moderate rate, actually, which also suggests effective use of assets. Yeah. Now, this return on equity of 26.15% is quite high, actually, and it indicates that Netflix is efficient in generating profit from shareholders' investments. At this point, we can now take a look at the income statements. Let's start with the revenue. The revenue of 33.2572 billion indicates the total assets, and and implies substantial market presence. 33.72 billion. That's good. And the revenue growth of 12.50% for Netflix. You can see revenue growth. Let me see. What is it? Let's see. Sorry, the quarterly revenue growth of 12.50% shows a healthy growth in sales, and also it's a positive indicator for future prospects. We can now look at the EBITDA, which is earning before interest, taxes, depreciation, and amortization. It is 7.31 billion for Netflix. So, and it represents earnings. I mean, it shows that this, it indicates a good operating performance. That's the best way to say it. A good operating performance. I mean, so far everything I've checked so far looks good for Netflix. You can see. Now let's look at the net income, which is the fancy name for net profit. A robust figure of 5.41 billion shows what is left after all expenses and revenues are deducted. All expenses are deducted from the revenue. So it is positive, and it means that the company is making money, definitely. And earning per share of 12.02 dollars is high, and it suggests that Netflix is generating substantial profits relative to its share count. Okay, and the quarterly earnings growth of 1,596% approximately is exceptionally high. Actually, it is exceptionally high. So it has exceptionally high growth rates of quarterly earnings, and this shows that it shows a significant increase in profitability. Although it is important to consider the context, such as the low base effect of the previous year. Okay. Now, at this point, let's look at the balance sheet. For balance sheet item, let's look at total cash, 7.14 billion, which is a healthy cash reserve that offers financial flexibility for Netflix. And then the total debt. I always look at debt. I always look at debt, because if a company is highly indebted, has so much debt, it will constrain their investment, because it means that to get more money from the bank or lender, those lenders or bank will be very concerned about too much debt. So it will be hard for the company to get that kind of loan, which means that if there's a new project that they want to implement to generate more cash flow, they cannot raise money to do that project. And their competitor might take advantage of that and then corner the market. So that's why I always look at debt. If it's too high, and I get concerned. Okay, and you should get one, and you should get concerned too when it is too much debt in the company. Now, anyway, let's look at this. We have total debt of 16.49 billion. 16.49 billion, which is a very significant. Simply put, Netflix has a significant level of debt that needs to be managed carefully. Okay. Can see the total debt 16. Okay. Yeah. Oh, not 0.49. Total debt is 16.97 billion, not 16.49. 16.97 billion, which need to be managed properly. Now, debt to equity ratio of 82.44% is high, but not unusual for a growth company like Netflix. So that figure indicates reliance on debt for financing. Now, but the good thing is that they have a current ratio of 1.12, which is not bad, since it means that the current ratio of 1.12 means that for each dollar of debt they have, talking about recurrent debt that are due within a year or less. So current liability, I call it. So that means for each $1 of them they have $1.12 to pay it. So if they have a 1 billion in debt and current liabilities, they have 1.12 billion to pay it, which means that they can meet up with their day-to-day obligations. Now, anyway, so the 1.12 current ratio is slightly above 1, indicating adequate ability to meet short-term obligations. Now, you can look at the cash flow statements. We'll have a operating cash flow of 7.27 billion. A figure that shows strong cash flow from business operations, and it's also a positive sign for operating efficiency. They also have a levered free cash flow of 19.38 billion, which also indicate the amount, it suggests a financial health and potential for growth and expansion. So generally speaking, from what I have seen so far, Netflix looks good. But remember, it is a technology company. So but unlike that, they produce things that people want. I mean, people get very emotional about movies. They love movies, and some people even do things based on the experience they get from movies. So, I mean, Netflix is good. I mean, everything looks good. No, I mean, there's a few bugs, definitely a few bugs, but the company looks good to me so far. So, to put it very simply, Netflix consistent revenue growth, substantial net income. See, social net income, I mean, compared to what they have in the industry, and high return on equity. High return on equity, okay, which you can see right here, 26.15%. Make it an attractive option for long-term investors. And the company's ability to generate significant levered free cash flow. You can see the ability to generate levered free cash flow. Let me say there's a debt. So let's see levered free cash flow. Yep, right here, 19.38 billion. Cash is a key strength. So let me put it a different way. Netflix consistent revenue growth and their substantial net income and high return on equity make it an attractive option for long-term investors. And their company's ability to generate significant levered free cash flow is also a key strength. But the only concern is the high debt level, which it's not really a disastrous debt level per se, but it's high, and I'm given the kind of the debt, their debt to income, their debt ratio of 1.12. It means that the company, I think they can handle that high debt. Do I say it? Because now the things are positive like this, I tend to recommend the company. So from what we have on Netflix, what should be my final recommendation for Netflix? Is it a good for buy and hold strategy? So is it a buy or a sell? Put it that way. I would say that it is a buy. Okay, I'm going to type it right here. So buy Netflix and hold it. And from what we have seen so far, I believe that stock will go up. I hope you enjoyed this lecture. Thank you for listening, and I will see you in my next lecture. Don't forget, my goal is to make you rich by showing you the company that you can put your money in, invest it, hold it for 2 years at least, or 5 years at least, then sell it and make money. So that's what I'm doing. That is my goal, and I will continue to follow that goal, and I will see you in my next lecture. You have a good day. Thank you for watching.